Well, hello, and I cannot believe we are just over a week away until Christmas. 2018 has flown past. This year, rather than sending out Christmas cards to all of you, I will be instead making a $500 donation to charity, and it will be the Humpty Dumpty Foundation. I think they do amazing work. It's incredibly practical, and it makes sure that the money, rather than sending out postage and postcards and cards, it goes immediately towards something which goes towards buying hospital equipment for children's hospitals. So I think we can all agree that's probably a better outcome. But I do wish you all an incredibly Merry Christmas, and a couple of things that I will be keeping a very, very close eye on over this Christmas, New Year into January break. So I have spoken about a number of times the fact that we are moving into a slower, more volatile share market. Now, we've seen the Australian share market and international share markets pull back significantly since the end of August. And I don't think we can be that surprised by it. Some of the prices in the marketplace were very high. I know for many of you, I've been talking about this for such a long time, that something was going to tilt markets. At the moment, it is still the core fundamental issues of we're essentially 10 years into a global expansionary situation in world markets, and that's post GFC. We've seen a few minor corrections go through the markets, but this is probably one of the bigger ones that we've had since that. And there's a couple of key drivers. Again, I've spoken about this, the increasing tension between China and the United States, the uncertainty that we're going to see around Brexit in Europe, and obviously the Italian debt has obviously been gradually increasing in the background as well. The other thing that we have to bear in mind, and again I've spoken to many of you about this, is that going forward we cannot expect the level of returns that we've seen over the last 10 years. If we think, in fact, over the last 20, if we go back to the world that existed back in 1998 or even 2008, we just had the iPhone for 1 year. 1998, the internet was just purely in its infancy. We have seen such economic growth both in Australia and globally from that technological advantage that has been gained by having this new technology, by having globalization in a really meaningful way. However, going forward, the benefit of that technology to be able to grow, to increase production, to increase productivity is going to fall. And that's why there is a general consensus out there amongst economists that we're not going to see the level of global growth over the next 10 years as what we've been able to enjoy over the last 10 to 20 years. Where are we and when is the recession coming? Look, share markets are always forward-looking. So a lot of this pullback that we're experiencing now is in contemplation for much, much slower economic growth, an expectation of poorer economic outcomes. Is it becoming a little bit too soon? Perhaps yes, but share markets always move well before we start to see unemployment rates fall, before we start to see any other significant changes. The other part of it is obviously inflation globally, which means the interest rate you pay on your mortgage, or if you're in retirement, the savings that we can get for your term deposits. It is really important to remember that that is still going to continue to be very low. As we enter slower economic growth, the likelihood of high interest rates still remains fairly unlikely, at least over the next 3-year time frame. So the things I'm going to be looking for this Christmas, while you're all hopefully enjoying a few drinks, is do we get another Santa rally? Nearly every year in December, January, and I know I've joked with many of you that the fund managers walk away and their second in charge walks in and gets very excited about being in control. Typically we do see a Santa rally. At the moment we're starting to see perhaps the beginning of it, but that is off a fairly low base in both the Australian and US share markets. I'll be keeping an eye out for that. The key thing that I'm going to be looking for, though, is how much instability we're going to see in the lead up to the 31st of March Brexit deadline. There's obviously a huge amount of uncertainty in that space, and if there's opportunities for us to potentially cash out of the share market and re-buy back in, that is something that I'll be speaking with most of you about if you are on an active advice plan. So I will leave you to it. Enjoy your Christmas. Know that I'm going to continue to be keeping a very close eye on markets. And in the new year, you're going to be getting the email to book in your next appointment and to make sure that we continue to move forward and continue to make any changes. If there are changes I want to make to your portfolio before the next meeting, of course, I'll be in contact. But for now, have a wonderful Christmas. Know that I'll be keeping a very close eye on share markets. Nothing unexpected has happened at this point in time. We are experiencing volatility, but for many of you, we've been through this, we've seen it before, and we've been able to take advantage of it as we did back in 2015 and 2016. So I've got a few strategies up my sleeve. So I'll speak to you in the new year, and very, very much looking forward to helping you achieve your goals in 2019.